Welcome to The Explainer. So today we're diving into a book written by a hedge fund pro, not for other pros, but to teach his own kids how to invest. And get this, he claims the secret to beating the market comes down to one super simple formula.
All right, so before we jump into the magic of it all, let's talk about the why. We've got to understand the problem this thing is supposed to fix. You know, the feeling that makes investing seem, well, pretty much impossible for most of us.
And for a lot of people, the answer is a big yes. The market just feels, totally wild and unpredictable, right? I mean, think about a giant company like General Motors. One day, the market says it's worth $30 billion. A few months go by and boom, suddenly it's worth $60 billion. Now, how can the actual value of a company that huge double in just a few months? Well, the book's answer is, it can't, but its stock price sure can. And that gap, that's what makes this whole thing so scary.
But what if there was a way to just ignore all that crazy noise? What if you could totally sidestep the market's mood swings by zeroing in on one simple core idea? I'm talking an idea so basic that a sixth grader could actually use it to make a fortune.
So the author, Joel Greenblatt, he kicks things off with this great little story. It's about a kid named Jason. And no, Jason isn't some stock market prodigy. He's just a regular sixth grader who stumbles upon this amazing business idea right there in his own school.
And Jason's business plan? It's so simple. He goes out and buys a pack of gum, the ones with 5 sticks, for 25 cents. Then he turns around and sells each individual stick for 25 cents. Just stop and think about that for a second. His 25-cent investment brings in $1 of pure profit. That's a 400% return on his money every single time.
And that little story, it basically explains the entire secret to investing. It's not about trying to predict the future or staring at complicated charts all day. Nope. It's just about two things: finding a great business and then buying it for a good price. That's really it. That's the whole game of value investing in a nutshell.
Okay, so that's a great story. But how do we take that simple logic from Jason's gum business and apply it to, the entire stock market? How do we find those great companies and make sure we're getting a bargain? Well, this is where the author brings in his so-called magic formula. Now, let's be clear, Greenblatt's formula isn't really magic. It's more like a really smart, systematic two-step filter. Its whole job is to do exactly what we've been talking about. Find companies that are basically like Jason's gum business and then only pull the trigger when the price is a steal.
So step 1 is all about finding a great business. The formula uses something called return on capital to do this. So let's imagine Jason scales up and wants to open a real store, and it costs him $400 grand. If that store pulls in $200 grand a year in profit, wow, that's a fantastic 50% return on his capital. But now let's say his buddy opens up a broccoli shop for the same $400 grand but only makes $10 grand in profit. That's a pretty sad 2.5% return. You want Jason's business, not the broccoli stand. That's what the formula considers a great business.
But look, finding a great business is only half the battle. You absolutely have to buy it at a bargain price. And the formula measures this with something called earnings yield. It sounds technical, but it's super simple. How much profit are you getting back for the price you pay? Say you buy a share for $12, and that share earns $2.40 for the year. That's a 20% yield. Great, but what if another great company's share also costs $12 but only earns half that much? Well, now your yield is only 10%. You always want the higher yield. That's the bargain.
Okay, so that's the formula. Find businesses with a high return on capital and buy them when they have a high earnings yield. It sounds so logical, right? So simple. But the million-dollar question is, does it actually work? Like in the real world?
Well, Greenblatt wasn't just spinning a nice theory. He put his money where his mouth is, or at least his data. The book lays out this massive 17-year study he ran, all the way from 1988 to 2004. He systematically applied the magic formula to the stock market and then compared its results against the S&P 500, which is, the big benchmark for how the overall market is doing.
And the results were absolutely staggering. I mean, just look at this. A portfolio built using the magic formula returned an average of 30.8% per year. The general market, the S&P 500, only got 12.4% during that same time.
So the formula didn't just kind of beat the market, it crushed it. It more than doubled the return.
Let's actually put that into dollars because percentages can be kind of abstract. Let's say you invested $11,000 back in 1988 into a simple S&P 500 fund. After 17 years, you'd have a pretty decent $79,000. Not bad. But if you had put that same 11 grand into the Magic Formula portfolio, it would have turned into over $1 million. That's the kind of power we're talking about here.
Okay, this is the point where you gotta be asking yourself, wait a minute, if it's this simple and it's that powerful, why isn't everyone doing this? Why aren't we all millionaires? And that question right there leads us to what is probably the most crucial part of this entire book.
And here's the catch. The biggest reason this formula probably keeps working is because sometimes it doesn't work. Yeah, you heard that right. Greenblatt himself says it plain as day. There are long periods, even years, where the formula will actually do worse than the overall market. And that right there, that's the point where almost everyone throws in the towel.
The numbers don't lie. Even during that amazing 17-year run, the formula fell behind the market for months on end. In fact, it could trail the market for up to 3 years straight. Now, I want you to really think about that. Could you, personally, stick with a strategy that's making you look dumb compared to your friends for 3 years in a row? Most people just can't stomach it. Their patience breaks, they sell everything, and usually it's right before the whole thing is about to take off again.
And that's really what this all boils down to. The magic formula, it isn't an intelligence test. It's a test of your emotions, your psychology. The math is simple. The logic is solid. But having the guts, the discipline, the sheer long-term patience to stick with it when it's not working, that is the real magic. So the question isn't really, does the formula work? The real question is, do you have the conviction to let